Welcome to the Central Bank of Kuwait's podcast. Our aim is to discuss key banking issues that impact the lives of both individuals and the society. I am your host, Fajr Al-Hajji, an economic researcher at the Central Bank of Kuwait. The main roles of the Central Bank of Kuwait include the issuance of the national currency on behalf of the state, ensuring monetary and financial stability by maintaining the value of the Kuwaiti dinar, and securing its free convertibility into foreign currencies, as well as directing credit policies to contribute to social and economic progress and enhancing national income. Other key roles include supervising the state's banking system and serving as the government's bank and its main economic financial advisor. Today we are pleased to be hosting Mr. Francisco Parodi, the Mission Chief for Kuwait at the IMF, the International Monetary Fund. We will be discussing the economic outlook for Kuwait. To begin our conversation, Mr. Parodi, would you please share with our listeners some insights about the International Monetary Fund, the IMF, specifically how it was founded, its mission and objectives, essentially what is the IMF?
Well, first of all, thank you very much for having me in this conversation. It's such a pleasure to be here. The IMF was established in 1944, right after World War II, during the Bretton Woods Conference. At the time, the membership was 40 countries, and over time we grew to 191 countries. Let me tell you that Kuwait has been a member of the IMF since 1962. You asked about our mission. Look, when the fund was founded after World War II, it was all about creating a better economic system. We wanted to avoid the mistakes that had led to the Great Depression, and we wanted to discourage, the founders wanted to discourage bad policies. We have a consistent mission. It has evolved over time, but basically has two big areas. The first area, our first mission, is to maintain global macroeconomic and financial stability. The second big area, second mission, and it's very relevant today, is to foster economic growth, particularly because larger growth leads to more jobs and higher incomes. This means that we need to work on ways and policies to lift productivity growth, reinvigorate international trade, and use technology for good outcomes. And we live in exciting times with AI and all the technological development. So it's very, very, this issue is very relevant for us. We also, lastly, before I forget, we have an almost universal membership in the world, 191 countries. So another big objective for us, a big mission, is to promote international cooperation. Look, these goals are as important today as they were in the history. The projections for growth for the next 5 years are at the lowest level in a long time. In a long time, I believe since the early 1990s. So a huge concern is how to create jobs and lift incomes for the population. So that is why it's very, very important that we focus on growth and actions to lift productivity growth in particular, and creating new opportunities for growth like technology and AI again.
Now that we have a better understanding of the IMF, could you elaborate on its role during financial crises? Are its decisions binding? And what exactly is the SDR and how does it function?
We play a very important role during global crisis. And look, this is linked to our mission and our goal, as I told you, of maintaining global economic and financial stability. You can think of us as the financial firefighter of the world. We are particularly experts, in particular during times of crisis, and we're called by our membership to serve them during times of crisis. A good example is the COVID pandemic. During the COVID pandemic, a lot of countries experienced sudden drops in income, in economic activity, fiscal pressures, their budgets were under pressure, and extremely high uncertainty. So what did we do? I told you about our mission, but the way we accomplish our mission is through three functions, and this is a perfect example on how we operate. Our first function, or our first task, was to provide country-specific policy advice to our memberships to ensure this macroeconomic and financial stability. We provided advice to ministries of finance on how to adopt good budgets. We provided advice to central banks to contain inflation, and also to make sure that the banks remain safe. We also provided technical assistance. That's our second function, providing technical assistance to countries to help make governments work more efficiently. Okay, and this includes training government staff. Okay. Lastly, we are also known, I mean, perhaps we're renowned for lending money to countries that need it. And we, since the pandemic, we lend close to $403 billion in total financial assistance to 97 countries, okay, of which around 57 were low-income countries where the impact of the crisis was particularly acute. With respect to the nature of our recommendations, our policy recommendations are not legally binding. It is up to sovereign countries to decide whether to implement the recommendations or not. It's up to their discretion.
As Kuwait is a member country in the IMF, please let us know what are the types of programs and assistance the IMF provides to member countries.
We offer a range of financing arrangements for countries that need financing. Now, this type of financing, this type of programs, depends on the type of pressures, financing pressures that the countries face, and the income level of the country, generally speaking. These lending programs are also for countries that face external shocks. Think of a low-income country that faces an external shock in which food prices has skyrocketed. We also provide what we call precautionary lines of credit. This is for countries that have very strong track records of economic performance and very, very, very good policies, but they would like to get insurance in case of unexpected shocks that may occur.
You were recently in Kuwait. Would you please tell us what are the objectives of your periodic visits here? Additionally, could you kindly explain what an Article 4 consultation entails?
Look, it's my pleasure. Look, I had the pleasure of being in Kuwait 3 times. And let me tell you why I was in Kuwait 3 times. All member countries of the IMF are subject to an annual assessment of their economy. Okay? This is what we call, what you just mentioned, the Article 4 consultation. Now, why is it called Article 4? It is because the fourth article of our Article of Agreements, that means the IMF Constitution, gives the IMF the mandate to carry out these annual consultations, these annual assessments of the economies. Okay? Now, our visits to Kuwait last year, we assessed the economic developments of Kuwait, we identified risks to the Kuwaiti economy, we project the economic outlook for Kuwait, and we, most importantly, provided policy advice to the authorities. We meet with a range of government officials. In Kuwait, we met with many ministries. In particular, we met with the ministries of finance, ministries of oil, ministries of electricity. A key interlocutor that I would like to highlight is the host of this podcast, the Central Bank. And we also met with the private sector. So when we finish these consultations, we have a final meeting with the governor of the Central Bank and the Minister of Finance, and we give them a summary of our assessment, of our recommendations. We come back to Washington, we write a long report. It's called the staff report for the Article 4 consultations that we submit to our board. The board has a meeting in Washington. It's a full executive board meets and discusses and approves this report. And the report gets published. You can find it on the IMF website.
So then, how would you assess the overall economic situation and policy priorities in Kuwait? And what is the IMF forecast for Kuwait in 2025 and 2026?
Okay, let me reverse the order and let me tell you first about our assessment of the economy in Kuwait, and then I will talk about the priorities. An economic recovery is underway in Kuwait. And this is something very, very relevant, and it's important that we discuss it because, as you know, in 2003 and 2004, overall economic growth for Kuwait was negative. It averaged a negative 3%. And this was done because of the OPEC plus production cuts. Okay? However, and very importantly, a recovery in the non-oil sector started last year, started in 2024. And we project this recovery to continue this year with growth of 2%, non-oil growth of 2%, and to gradually increase over time to 2.5% through 2029. Another positive aspect of the outlook is that inflation is expected to decline. It was 3% last year, and it will slowly converge to 2% over the medium term. We expect inflation this year to be 2.5%. You asked me about priorities for the future. This is a very relevant question and the question for Kuwait. We think that Kuwait has one strategic priority, which is to diversify its economy. Okay? How do we do so? How do we recommend that Kuwait diversify the economy? There are two sets of measures that need to take place simultaneously. Okay? The first is to decouple government budgets from oil prices, de-link the budgets from oil prices. The second measure, the other set of measure, is to promote non-economic growth. And how do you do so? By implementing an ambitious reform package. Okay? Now, let me expand a bit on the fiscal measures, okay? Because I think this is very relevant for Kuwait. The fiscal measures here, what do we mean by fiscal measures? It's like a technical term. We recommend that Kuwait focus on preparing prudent budgets that do not overspend when oil prices are high and do not underspend when oil prices are low. Look, this is very important for Kuwait because Kuwait relies on oil for 90% of oil revenues. So it's important also for Kuwait to mobilize alternative sources of financing, to not depend on oil so much on the fiscal side. And finally, on the fiscal side, it is imperative that Kuwait improve its efficiency of public spending. In colloquial words, in simple terms, use your money wisely. And here a key point is to undertake subsidy reforms, most notably of oil and the electricity sectors, okay? Which in Kuwait are very generous.
You've described Kuwait as a resource-rich country. What does that mean? And what are the implications for tackling economic and structural reforms?
Kuwait has a lot of oil. That's what it means. It means for Kuwait has a lot of oil. It's a resource-rich country. Now, this has been very positive for Kuwait, of course. It's a blessing for Kuwait. It has allowed the government of Kuwait to provide high standards of living for Kuwaitis over time, high-income living standards. It has also allowed Kuwait to accumulate substantial financial buffers to save a lot of their proceeds. That's a very positive outcome. In recent years, however, Kuwait's government has had very high government spending. This government spending might not be sustainable over time. What do I mean by that? Look, oil prices in the next few years, markets expect oil prices to decline over the next few years. So it's not clear that Kuwait will get the same level of revenues in the years to come. Okay? In addition, also, oil prices are very volatile, okay, and difficult to predict. This makes it very hard for the government to forecast and to plan ahead, okay? That is why we think that diversification is the central policy priority for Kuwait.
You've noted the need for economic and structural reforms and diversification, but what are the means for economic diversification for a resource-rich country like Kuwait?
In Kuwait, we recommend a comprehensive package of reforms and investments to diversify its economy and to create high-paying jobs for Kuwaitis, okay? And the first, this can be jump-started, or it's critical for Kuwait to focus on improving the business environment, okay? Based on three principles: transparency, efficiency, and openness. And what do I mean by that? These are big words and these are principles. So let me first start with transparency. By transparency, what we mean is that Kuwait needs to improve its data disclosure, both of its private sector operations and government operations, and also improve auditing standards for firms. Foreign firms or the private sector benefits from transparency and predictability. And I think that's an important principle to follow. The second principle that I mentioned was efficiency. And the efficiency of the private sector and of the economy can be improved by having a bigger quantity of public infrastructure. And also thinking of ways to streamlining regulations to make it easier for businesses to operate in Kuwait. And the last principle is openness. Openness to foreign investment. Allowing foreign investment of full foreign investment of businesses and relaxing land ownership restrictions for foreigners will be very important for big companies, big foreign investors to come to Kuwait. All right. In parallel, Kuwait also needs to work on labor market reforms. It has a young population with very high aspirations. So it's necessary to promote opportunities for the youth and for its population to join the private sector ranks. Okay, and this can be done through active labor market policies, but most importantly, I think any very important component here, very important part, is education. Okay, the education sector needs to improve and needs to be able to provide skills to young Kuwaitis that are needed in the private sector so they can get high-paying jobs in the private sector. Okay.
In terms of this diversification and the condition of the private sector here, how do you evaluate the monetary policy measures taken to support the growth of the private sector here in Kuwait?
Look, the monetary policy stance in Kuwait is appropriate. It's anchored by a very credible exchange rate peg to an undisclosed basket. And this monetary policy stance and this anchor to an undisclosed basket has served Kuwait very well. It remains appropriate, and it has supported macroeconomic stability. These are big concepts again. Let me give you an example, actually, how the central bank does its job. Let's consider interest rate policy, okay? The central bank here has implemented a very balanced approach towards interest rate adjustments in line with global developments, okay? Particularly the US Federal Reserves. In 2022, 2023, the Fed rates its policy interest rate, we call it the Fed funds rate, by 525 basis points. Okay, that's 5.25%. Okay. In contrast, the Central Bank of Kuwait raised its policy rates by only 275 basis points, by a lower amount. Okay. Why is this important? Why was this a good policy? Because this has allowed the central bank to shoot three birds with the same stone. It has been able to maintain macroeconomic stability. The relatively lower interest rates have supported private sector growth, and at the same time, it has limited financial distortions. It has not caused any trouble in the banking system. So that's something that we consider to be a big accomplishment for the Central Bank of Kuwait. And it was in a very difficult post-pandemic period, so I want to highlight that too.
It's reassuring to hear that Kuwait's monetary and fiscal sector policies are a source of strength. You also refer to Kuwait as a safe haven country. What does that mean?
A safe haven country is a country that issues assets, financial assets, bonds and stocks, colloquially speaking, that maintain their value when markets are in turmoil. Okay, they maintain their value when markets are in turmoil. Like, okay, you know, when there are periods where the stock market goes down and when interest rates increase a lot and bond markets go down, how are the instruments of a country affected, right? And in Kuwait, our analysis finds that government bonds tend to perform on par with U.S. government bonds at times of global financial stress, and its stocks overperform U.S. stocks. Okay, so that's how a country is a safe haven country, and we have seen that. We have shown that in our Article 4 report.
Maybe you could explain, how does a country become a safe haven?
It's no coincidence. It's no coincidence, and this is something that takes time. 3 ingredients. First ingredient, a history of macro and financial stability, which Kuwait has. A second ingredient, a track record of good policies. And I think I explained, we've spoken before about, Kuwait's monetary policies in particular that we highlighted. And 3, a sound policy framework, okay? Strong institutions that work well. Those are the 3 ingredients for becoming a safe haven country.
Let's go back to monetary and fiscal policy. What is the role of fiscal and monetary policy with regards to safe haven status?
We talked, I think, in a previous answer, I mentioned how it's important to de-link fiscal policies from oil prices, okay? And it's important here that in the case of Kuwait, the fiscal policies remain counter-cyclical. And that's a very fancy way of saying what I just said. Do not overspend when oil prices are high. Do not underspend when oil prices are low. And particularly when an economy like Kuwait gets hit by shocks, okay? It's also important for fiscal policy over time to be such that there are no large budget deficits and debt remains low. In Kuwait, I think Kuwait must be perhaps one of the lowest, least indebted countries in the world. It has debt as a percent of GDP of less than 4%, which is remarkable. Okay, as regards monetary policy, it should be aligned with its exchange rate regime, and we discussed that, and we discussed a very good track record in the past 3 years of monetary policy in Kuwait.
Finally, what is the role of the banking sector in a safe haven country?
The banking sector in a safe haven country should have also a track record of being sound, okay? Should be financially sound. I will get to that in a second. And also it has to have a good, prudent financial regulation, okay? Now, again, what is financially sound? Kuwait's banks have a very strong capital and liquidity buffers. They have a large capacity to lend to the private sector, so they're able to support economic activity. And also, non-performing loans are very low. They're at roughly 1.5% of total assets, risk-adjusted assets. This is remarkable. This tells you the good shape that the banking system in Kuwait is. And it's a testament, frankly, of the second issue it's the testament to the good job that the central bank's supervisory authority is doing. It's remarkable.
Thank you so much for joining us, Mr. Parodi. It's been interesting to learn more about the IMF and your insights on economic and fiscal reforms in Kuwait. I'm Fajr Al-Hajji from the Central Bank of Kuwait. Thank you for listening.